They said he was risking it all, again. Could Michael Saylor really be doubling down on his boldest Bitcoin ambitions, right as the world teeters on the brink? This is where the story begins. A dramatic, high-stakes narrative surrounding one man's outrageous faith in the power of digital currency and a global economy struggling to keep its balance. Today, we dive headfirst into the swirling controversy behind Saylor's astonishing calls, his jaw-dropping billion-dollar moves, and the uncertain road that lies ahead for every crypto enthusiast. What in the world is happening with Bitcoin right now, and how does it all connect to rising international tensions and the latest signals from central banks? In this episode, we unmask the surprising twists behind Strategy's monumental Bitcoin acquisition, worth over $1 billion, explore whether Saylor's unshakable commitment is bright genius or wild gamble, and dissect the idea that cryptocurrency might just be the ultimate escape hatch from shaky centralized systems. We'll uncover why some see Bitcoin as a fortress in times of geopolitical storms and monetary upheavals, and we'll reflect on the skeptics who can't seem to stop warning about the inevitable meltdown. Our story unfolds from the moment Michael Saylor posted a cryptic tweet that set the internet ablaze. Hearts raced and pundits speculated wildly when his tweet read, "BTCE free," with a dazzling animated image. Saylor, dressed in a sharp business suit and tie, perched atop a yacht with an orange sail, blazing with that iconic Bitcoin color scheme. Just as his detractors clamored to tear down the hype, Strategy dropped a bombshell that ignited a new wave of crypto chatter. The company had just snapped up over 10,000 Bitcoins, lifting its total holdings to more than 592,000 tokens, with a staggering valuation climbing well past $61 billion. What does that say about the organization's broader vision and priorities? This revelation jolted the industry, as the brand known simply as Strategy showed unwavering devotion to the grand cryptocurrency experiment. As if announcing the purchase were not enough, Saylor seemed to wrap it all in a single electrifying statement. Bitcoin stands for financial freedom, an exit strategy from outdated monetary systems, and a shining beacon of hope. At least, that's how fans interpreted it. Critics, on the other hand, bristled at what they called reckless investing. The timing couldn't have been more dramatic. Rising tensions in the Middle East were shaking markets around the globe, fueling widespread uncertainty. In the face of this turbulence, Bitcoin itself wobbled, dipping for a time, only to rebound. On one day, the price slid in response to certain catalysts, such as news from the Federal Reserve, then soared back after speculation about possible rate cuts or monetary policy shifts. This volatility had some analysts concluding that crypto is still far from a stable store of value, while others insisted that Bitcoin's ability to recover quickly underscores the currency's growing resilience. Where does this yearning to be free come from? By now, Michael Saylor is almost legendary for his unwavering stance. Years ago, he famously referred to Bitcoin as digital gold, a fortress asset immune, at least theoretically, to the manipulations of central banks. In times of inflation, currency debasement, and the threat of big-scale conflict, Bitcoiners believe that a decentralized digital coin, free from government printing presses, may be the ultimate safe haven. Though mainstream investors remain divided, Saylor's grand proclamations and billion-dollar moves have forced everyone to pay attention. Before we explore further, if you find this angle on Bitcoin's worldwide saga engaging, consider tapping that like button to let us know we're on the right track with these deep dives into game-changing stories. Every bit of support helps us reveal more of the crypto world's most riveting sagas. Now, back to the heart of the matter. The notion of Bitcoin as a new hedge has gained renewed traction as global unrest surges. Some compare it to owning gold bars stored in a hidden vault, or property in a stable country. The difference, proponents say, is that Bitcoin is digitally transferable and truly borderless. No matter where an individual is located, as long as they can access their digital wallet, they can maintain control over their funds, independent of capital controls or sudden restrictions. This principle is especially relevant when the world finds itself in chaotic times, with banks occasionally freezing accounts or entire economies shutting down under political pressure. Still, not everyone is on board. A wave of pundits, including certain conservative financial veterans, argue that tethering one's wealth to a famously volatile cryptocurrency is nothing short of financial lunacy. How can a digital coin that swings thousands of dollars in a single day ever be seen as a stable hedge, they ask? They also point to those occasions where Bitcoin's dramatic highs are followed by painful lows, leading many to question the coin's reliability as a bulwark. Yet for every skeptic, there's another devoted admirer who cheers its potential. The real question is whether Saylor's lofty Bitcoin messaging, amplified by the almighty checkbook of strategy, signals a turning point or is merely a spectacle. In seeking answers, let's cycle back to the massive purchase itself. Over $1 billion in Bitcoin. Think of that for a moment. That's far more money than most philanthropic organizations allocate in a year, all placed into an asset that some critics still label as intangible hype. Why did strategy do it? According to those close to the company, it's simply a further step along a clearly defined plan to hold as many Bitcoins as possible. They see this digital currency as the bedrock of their reserves, outshining traditional staples like government bonds, various forms of fiat, or precious metals. Their argument is that while the US dollar remains subject to the Federal Reserve's multi-pronged policies, and precious metals can be cumbersome to store or transfer, Bitcoin provides a cunning alternative with the potential for significant upside. The risk factor looms large, but so does the conviction. Meanwhile, the broader market took a breath. Right around the time of the purchase, the Federal Reserve announced that interest rates would remain unchanged. Some watchers had hoped for a rate cut, expecting that it might accelerate institutional interest in cryptocurrencies. But the news that rates would stay put for the moment triggered a dip in Bitcoin's value, if only for a short time. The token slid down by a small margin, prompting a fresh wave of commentary about whether the Fed's policies align with the typical investor's appetite for crypto. Anthony Pompliano wasted no time slamming the Fed, labeling their approach ridiculous and underlining that in an era of potential recessions, propping up the economy with more flexible policies might have offered a tailwind for Bitcoin. But the dip ended. Bitcoin bounced back as though recharged by the ongoing hype cycle. And then came what some considered the real curveball, escalating military conflict in the Middle East. Historically, wars and conflicts have driven investors to safe haven assets. Although gold is typically the first that springs to mind, Bitcoin's supporters now present it as a parallel alternative, a democratic hedge that neither a single government nor a single conflict can easily corral. Indeed, as tensions ramped up, the coin's price displayed pockets of resilience, even as naysayers insisted that such chaotic conditions were the worst time to bet on an unregulated digital currency. Saylor's stance, clear and unwavering, only got bolder, reiterating across multiple interviews and social media statements that Bitcoin remains the ultimate freedom instrument for those who see the writing on the wall. Peel back the layers of that statement, and you find yourself confronting the deeper significance of Saylor's phrase, BTC free. Those two words open up a torrent of commentary on the potential of decentralized finance to create or restore freedom in a world dominated by institutional players. The sentiment, if not the exact phrasing, resonates with that rebellious streak lurking at Bitcoin's origin, when the very first block carried a coded reference to a government bank bailout. The idea then was that a decentralized, trustless monetary system could liberate individuals from the arbitrary decisions of centralized authorities. Saylor's friends and followers consider this moment to be the triumphant return of that ethos, now backed by billions of dollars in corporate support. Yet, it's crucial to remember how polarizing Saylor remains. Wealth managers who have spent decades operating within the established financial system find it difficult to accept that a digital coin with no physical backing could ever serve as a robust reserve currency. They caution that the day might come when regulatory hammers drop in ways we've never seen, sudden taxation changes blindside crypto holders, or a new generation of digital coin dethrones Bitcoin altogether. Saylor, quite famously, waves off these scenarios, insisting that Bitcoin's open network, brand recognition, and proof-of-work backbone grant it unparalleled staying power. His logic echoes the perspective of those who see it as a monetary revolution that no government can effectively stamp out. However, the practical question remains. In the face of all this emotion and speculation, how should global financial institutions respond? Even large banks that initially dismissed crypto as a passing fad now invest in research and, in some cases, experiment with private blockchains. Some have begun offering Bitcoin custody services or forming specialized crypto trading desks. The legitimacy of crypto as a market, once barely recognized, has grown leaps and bounds, and public companies are now weaving it into their balance sheets. The world is in flux, and Saylor's high-profile maneuvers reflect this unstoppable evolution. But does that evolution arise from confidence or from mania? That's the tightrope we're crossing. It's also worth peering into the behind-the-scenes chatter. Word on the digital street is that Strategy's repeated Bitcoin buys may inspire smaller institutions to follow suit. Metaphorically, seeing the big players jump into the pool can encourage the timid ones to dip their toes. If one corporation invests billions, perhaps it's no longer so outrageous for a smaller entity to place a portion of its treasury in crypto, especially if it sees any chance of leveraging these assets for growth or as an alternative to currency depreciation. If the tide of major corporations continues, it could set the stage for an entirely new era of mass adoption. But, of course, if these giant bets go sour, the resulting backlash might slow the crypto wave dramatically. For now, Saylor keeps turning up the volume. He highlights that the mere presence of a global conflict underscores the fragility of fiat money, reminding people that a digitized, borderless asset might just offer solace in times of crisis. Those supportive of the concept usually point to nations with high inflation or heavy-handed capital controls, where people have historically turned to cryptocurrencies in order to protect their savings. The process Saylor advocates is effectively a scaled-up corporate variant of this approach. Instead of an individual or family storing a few $1,000s in Bitcoin, he's commanding the purchase of thousands upon thousands of Bitcoins, effectively commercializing the pivot to crypto. Now, you might be wondering if we're overstating the scale. More than 592,000 Bitcoins are under Strategy's umbrella. That's a mind-boggling figure by any standard. We're talking an amount of money that surpasses the gross domestic product of some smaller nations. So, in essence, the story is not just about one man's repeated bets on a famously volatile coin. It's about the intellectual shift that allows a publicly noted entity to adopt a form of currency once considered the realm of fringe internet enthusiasts. It's about the symbolic and practical ramifications of so much capital bearing the Bitcoin flag, waving it side by side with mainstream corporate interests. And it inevitably begs the question, is this the spark that truly lights the fuse of the next crypto wave? Skeptics maintain that the entire spectacle is more marketing stunt than revolution. They claim Saylor thrives on the drama of making outsized statements, fueling a feedback loop of social media frenzy, and then riding the wave as various supporters pump up the Bitcoin price. But supporters push back, reminding the world that Saylor has already been proven right in some respects. Bitcoin's price, while volatile, has soared well beyond its earlier thresholds, even if it stutters now and then. According to the bullish viewpoint, his unrelenting optimism has so far been rewarded with a net gain, provided that one zooms out far enough on the historical chart. Of course, not everyone trades on the long time scale. Day traders want immediate profits, eyeing the latest interest rate announcements and war headlines like hawks. Indeed, the immediate effect of Federal Reserve decisions, combined with conflict-driven turmoil, has amplified short-term volatility in crypto markets. One moment, we see a spike as inflation concerns prompt people to flee to alternative assets. The next moment, we see a sell-off as battered investors lose their appetite for risk. It is precisely this roller coaster that drives the argument for or against Bitcoin. How can something that seesaws so violently be a safe haven? So we land at a philosophical crossroads. The clash centers on the concept of sound money and financial sovereignty. According to Saylor's vantage point, Bitcoin is not simply an investment, but a radical shift in how money works. A pivot from top-down to bottom-up empowerment. People who buy in see themselves as embracing a grand experiment in an era of creeping distrust in legacy institutions. That's probably why Saylor's BTC free tweet struck such a chord among followers. It underscored the synergy between personal freedom and cryptographic technology, resonating with the original vision of a monetarily ungovernable, unstoppable network. If you've been gripped by that vision and want to stay in the loop as we decode more unfolding stories, consider subscribing. We're dedicated to bringing you the most compelling and twist-filled narratives that define our rapidly shifting financial landscape, and we'd love to have you along for the ride. Yet, the murky shadows of potential hazards loom large. Some analysts point out that by making Bitcoin so central to Strategy's reserves, Saylor is effectively placing the fate of the company in the hands of an asset known for double-digit intraday swings. All it takes is a catastrophic meltdown, perhaps triggered by an unprecedented regulatory clampdown or a cataclysmic security breach, for that fortress to reveal serious vulnerabilities. Others counter by noting that it's precisely the decentralized, heavily audited nature of Bitcoin that prevents such meltdown scenarios. The technology behind it, though not perfect, has remained remarkably robust. Let's not forget the role of altcoins in the grand scheme either. Strategy's investments have zeroed in primarily on Bitcoin, overshadowing other popular digital currencies like Ethereum or Dogecoin, while some other corporations dabble in diversified crypto holdings. Saylor's public strategy shows an unwavering commitment to the original crypto. That begs further questions. Does this single-minded focus ignore other promising blockchains that might see bigger gains? Or does it exemplify a strategic approach to the only digital asset widely seen as a globally recognized store of value? Committed Bitcoiners side with Saylor, but broader crypto aficionados sometimes wonder if companies might miss out on innovations in decentralized finance, smart contracts, or other realms not covered by the Bitcoin network. Grand narratives aside, the short-term price action has been mesmerizing. One day, the coin plunges a few percent on hints from the Middle East that an escalation could disrupt supply chains or spook big investors. On another day, it recovers mightily when rumors swirl that the Federal Reserve might blink and slash rates in the coming months, injecting liquidity that often finds its way into risk assets, including crypto. The repeated psychological pivot from gloom to euphoria and back again is precisely what enthralls onlookers and leads to those breathless headlines. Time and again, Bitcoin demonstrates that it can still shock everyone with its swiftness, both upward and downward. At the center of that pandemonium stands Michael Saylor, that same entrepreneur who seems unafraid to wade into any debate with effusive praise for the digital coin. Only time will tell whether his pronouncements will ring as visionary or reckless. Some watchers predict a day when Saylor's face is carved alongside the likes of early internet pioneers, commemorating those who saw the bigger picture before the mainstream caught on. Others foresee him as the poster child for hubris, a cautionary tale of how a single-minded pursuit of Bitcoin can unravel fortunes. One might assume the truth lies somewhere in between. Corporate adoption of cryptocurrency probably won't come entirely from fervor alone, nor will it fade away after a burst of mania. Instead, it will likely proceed in fits and starts, responding to broader economic cues, regulatory developments, and the continuing evolution of blockchain technology. The tensions in world markets may, ironically, nudge more companies to reevaluate their reliance on current financial systems. War, inflation, and central bank interventions can collectively stoke fear, and fear often drives innovation, leading people to search for new solutions to old predicaments. That's where Bitcoin steps into the limelight, armed with Saylor's persistent cheerleading. Indeed, the backdrop of conflict, inflationary anxieties, and global realignments weaves an unpredictably intense tapestry. Nobody can foresee the exact impact on crypto markets. One day, a massive wave of institutional money might sweep in, doubling the Bitcoin market cap seemingly overnight. Another day, an unexpected crackdown might send the price tumbling, or perhaps the pattern will remain cyclical, forging an endless series of boom-bust cycles that reward the patient and punish the short-sighted. Strategy's enormous bet has effectively joined forces with that swirling tide, whether it leads to bountiful riches or harsh lessons. By leaning heavily into these turbulent waters, Michael Saylor has taken on the role of lightning rod. He channels the energy and friction of an entire movement. The tweet, the orange sail, the lavish yacht. These images linger and draw us in with questions. Are we witnessing the dawn of a new financial era, fronted by corporate whales who see beyond the horizon? Or are we merely observing a grand display of marketing bravado, destined to fizzle if Bitcoin ever faces a crisis it can't overcome? His supporters see an unstoppable wave of progress, while his critics mutter that even the largest icebergs can appear invincible until they begin to crack. Yet, for all the debate, the public's fascination endures. In an unstable time, when entire national economies can falter under the weight of political upheaval, conceptions of monetary sovereignty have unprecedented relevance. Cryptocurrencies stand at the intersection of technology, personal freedom, and economic evolution, with Saylor being the resounding voice proclaiming their supremacy. Even if one doesn't share his unshakable faith, it's difficult to dismiss the cultural momentum that has grown around Bitcoin in the past decade. This momentum now includes multinational corporations, major banks, and millions of ordinary people convinced that this digital coin is more than an investment. It's a declaration of independence. As we reflect on these developments, the fundamental question remains whether the world is truly ready to BTC free, and what that freedom entails. Does it mean liberation from interest rate policies that some view as instruments of financial control? Does it mean a bypass around the Earth's conventional power structures, allowing individuals and organizations to store and send funds without gatekeepers? Or is it a utopian notion, overshadowed by the harsh reality that governments rarely yield to things they cannot regulate? One thing is certain: Michael Saylor's sensational announcement and Strategy's astronomical purchase serve as rallying cries for everyone who sees the future in a decentralized monetary network. They have raised the stakes, sure, but they have also crystallized how far the notion of Bitcoin has come, journeying from obscure corners of the internet to the corporate treasury of a large-scale enterprise. This could be just the beginning. In the end, whether we admire or criticize Saylor's repeated leaps of faith, we can't help but watch. The world stands transfixed by the possibility that a premier digital currency could reshape finance in ways previously thought impossible. If you found this saga of bold moves, risk, and resilience riveting, go ahead and drop a like or a thumbs up wherever you're listening. Let Michael Saylor's unstoppable drive be a testament to the heights that unwavering conviction, even in the face of massive volatility, can scale. Perhaps tomorrow the storms of conflict or another Federal Reserve announcement will jolt the markets again, reminding us that in a truly globalized economy, no asset is an island of tranquility. Yet, perched on his metaphorical yacht, Saylor waves the bright orange sail, championing the idea that Bitcoin is the ticket out of a failing system. Will it be that escape route so many are longing for, or a dead-end street for those who pinned all their hopes to the flip of a digital coin? Only time can unveil the truth. Until then, the enthralling story keeps us all leaning forward, eyes locked on the horizon, wondering what fresh surprises await in the next chapter of this grand monetary odyssey.